Bitcoin just pumped last night, and we got a huge week ahead. This is one of those rare weeks where big money and crypto rules are both moving at the same time. Welcome back to Black Room Trade. In this playlist, we don't predict price, we analyze the market environment, and think about how we should position ourselves in the upcoming months. Now let's get into the stage that is set for this week, because today is the CPI day. Now if you're new to this, don't worry, we're going to explain exactly what this is. And this week, it's going to be super packed. We have the inflation data coming out, decisions about tariff coming from the courts, massive vote on new crypto bills in the Senate, and we have the Federal Reserve updating their bank account. So let's start with the boring stuff that actually moves the money. Today's going to be CPI day, where the US government is going to release the CPI and the core CPI. Now, for those who don't understand this, CPI stands for Consumer Price Index. Think of it as a receipt for regular life. It means how expensive it is for buying grocery, gas, and clothes. Now, core CPI is the same thing, but they remove food and energy price. The reason is because gas price goes up and down like crazy, so core shows us the real underlying trend of inflation. Here's your cheat sheet for this week. Now, tomorrow we're going to have the PPI data as well. So if CPI is the price we pay at the store, PPI is the price the store pays to the factory. And that is important because if it gets expensive for the factory, eventually it's going to get expensive for us. So it predicts the future. Also on Wednesday, the US Supreme Court is going to release opinions. I know we've been watching this for a while because they might rule on tariff. And we know we don't like tariff because it shakes up the global economy and crypto has been affected over the past year. Now finally on Thursday, we got two important things. The initial jobless claim, pretty much a fancy way of counting how many people filed for unemployment benefit last week, and the Fed's balance sheet, where we get to peek into the Federal Reserve checkbook. This is going to tell us if they're adding liquidity or draining liquidity away from the market. So the rule of thumb for this week, more money in the system, it's usually better for Bitcoin. Now let's take a look at the crypto market. Just a quick reminder on three things happening right now. Binance is doing a house cleaning. If you're trading one of these pair, you might want to take a look at this because Binance is removing margin trading on these pairings. Now the second is going to be the strategy well is back. Now MicroStrategy just made its bigger purchase since July 1st, and they bought another 13,627 Bitcoin. And last, we have some of these tokens are going to be unlocked. So be aware that early investor might decide to take profit once the tokens are unlocked. Watch out for the sudden price drop. Now, the biggest story in Washington is still the Clarity Act, and the Senate votes are going to be on this Thursday. Now, we did a full deep dive on this in my last video. So if you haven't seen it, I'll link it right here. Now, you might ask, what other bills are out there? While everyone is watching the Clarity Act, a second bill appeared yesterday that is very important. It's called the Blockchain Regulatory Certainty Act. And the reason why this matters is because right now, the government is trying to treat everyone in crypto like a bank. If you run an exchange, you're a bank. If you write code for a wallet, they wanted to treat you like a bank too. Now this new bill is going to fix that. It's going to separate developers from operators. So think of it like this. If you build a vending machine, you shouldn't be arrested if someone else uses it to sell illegal items. Now this bill is going to protect the coders. If this passes, it means developers can now build DeFi apps in America without fear of going to jail. Now this is huge for the innovation. One more thing on regulations. You might be asking, why is the government moving so fast on this all of a sudden? The answer might just be in a report that dropped yesterday about something called jurisdictional arbitrage. I call that the global hide and seek. There's a report that two companies registered in the UK moved about 1 billion in stable coins for sanctioned entities. Now here's the thing, regardless of the politics, regulators see this as a massive loophole. The company is registered in one country but operates globally, and the money moves on chain. So when 1 billion slips through the crack, regulators get nervous. They see it as a blind spot in the global financial system. This event might be one of the catalysts, and it might be one of the reasons why they're rushing to pass these new laws. They want to close these blind spots immediately. So the setup is clear. Today, we're going to watch the inflation number. If it comes out lower, it might be good for the market. And that's what I have for you guys today. If you found this video helpful, please drop a like and comment, subscribe to the channel, and I'll see you in the next one.